a huge weekend for M&A news, the most important headline on a macro level was that TikTok owner ByteDance has rejected Microsoft's advances, instead opting for Oracle as their US suitor. A Reuters report suggests that rather than a sale, this partnership would act as a restructuring, placing ByteDance's US user data in the hands of the American firm. That it is Oracle over Microsoft shouldn't pose a problem for Trump. The former's founder, Larry Ellison, held a fundraiser for the president back in February, while Trump himself publicly backed Oracle to pair with TikTok when this saga first began. However, the president might be unhappy with the specifics of the deal, namely that it is unclear if anything will actually be owned by Oracle rather than just managed. From a geopolitical perspective, it will be interesting to see whether this causes a flare-up or a cooling down of relations between the US and China. It could be seen as a compromise, with TikTok giving over their US data without having to sell it off. Then again, Trump isn't exactly a fan of compromises, so it'll be interesting to see how this latest step in the saga pans out. Apart from TikTok, the week's focus is Wednesday's Fed meeting, the final one before November's election. The main takeaway from the online Jackson Hole Symposium back in August was that from now on, the Federal Reserve is going to have a more relaxed approach to inflation. Specifically, it will allow the US CPI to overshoot the 2% target in order to compensate for periods that fall below that long-held aim, hopefully creating an average of 2% across any given year. That's a long way to say that the interest rates are staying near zero for a while. In terms of what the Fed has in store on Wednesday, a further articulation of its new inflation policy is to be expected. However, the markets might be disappointed by the lack of another stimulus injection. Jerome Powell and the rest of the FOMC are still waiting on Congress to hash out a bipartisan COVID-19 spending plan. One suspects the more elderly members of the central bank shouldn't hold their breath. Before Wednesday's meeting, there's a busy Tuesday with Empire State Manufacturing Index import prices, industrial production and capacity utilization rate readings. On Wednesday itself, meanwhile, the get-together is preceded by the latest retail sales figures. Thursday then sees the Philly Fed Manufacturing Index during the usual jobless claims, hoping to stay under 1 million for a third week in a row, while Friday is the most recent current account and consumer sentiment numbers. Elsewhere, a buffet of Chinese data could inform how the markets behave pre-Fed. Industrial production, fixed asset investment and the unemployment rate were all released in the early hours of Tuesday morning. The most important number, however, will likely be the retail sales reading. It has remained negative for the last 6 months, despite forecasts stating otherwise for June and July. Will August number finally see China's retail sector swing positive? Analysts are looking for an unimpressive 0.0%. However, the readings have been off for the last few months, so who knows what it'll actually come in as on Tuesday morning. There are also still question marks over investors' feelings on the US tech sector, which has seen a rollercoaster start to September after a blockbuster summer. The market's feelings on the sector sort of swung to and fro without necessarily much reason. The initial decline at the start of the month didn't really have anything behind it beyond investors deciding that these stocks were now at a premium and needed to be taken down, with the recovery at the same time, or the rebound rather, at the same time, not having much behind it beyond a sudden shift in sentiment, again, that these stocks that were appealing at one point back in August are now just cheaper. So it's going to be interesting to see how that continues to play out as September progresses.